Good morning. Today is Thursday, June the 15th. The time right now in Singapore is 8:24 in the morning. And of course, last night we have the FOMC meeting in which the Federal Reserve, as expected, paused its interest rate hike for the first time since March of 2022 after 15 months of consecutive 10 rate hikes. So this is market expectation. There's no surprise there. However, the Fed chairman actually, during his press conference after the rate hike decision, told the market that to expect another two more rate hikes of maybe perhaps 0.5% towards from now till the end of the year. So that caused the market to react a little bit differently, with US equity market closing a little bit mixed, with the Dow Jones actually falling and the S&P 500 basically remaining unchanged, and the Nasdaq went up. So basically we have a bunch of different reaction in the equity markets as well as in other financial assets. So let's go through each one of them. And in the Dow Jones earlier on, I did mention the market actually went down 0.7%, and here in the 4 hours time frame we can see that the drop here may have signified a temporary top in the Dow Jones at 34,310.3. So if this drop overnight may actually set the stage for further declines towards perhaps the 33,300 levels to perhaps as low as 33,150. So within this bracket of prices, continue to see perhaps buying interest returning again, but we will have to watch for that development. At the end of the day, maybe this market have one more leg to go before it actually call it a day for now. So do watch out for that possibility of a temporary pullback for perhaps another rally to challenge the most recent high. Now in the S&P 500, I mentioned the market closed basically about unchanged. Actually it's up 0.1%. The high traded was 4,391.8, and the market is within this bracket of prices now. I did mention this price many times. 4,426 to 4,517 is my range of targets. Prices in which I do believe some kind of selling interest may actually emerge. So for the time being, if we do see a pullback relative to what we saw in the Dow Jones, this could see S&P 500 pulling back towards the 4,170 to 4,250 levels. So perhaps look out for that a technical pullback before the market attempt to trade even higher. So in the Nasdaq, we can see that the Nasdaq reacted very differently. It actually closed up 0.4% to a high of 15,017.10. So this is the new high for the year itself. And because the other two equity index may be under pressure, we could see that the top side for this move in the Nasdaq could possibly see a challenge of a key level at 15,265.4. Now this level is very key to me. If this level is breached, meaning the prices go straight beyond this level, it could change the dynamics for me as far as the bullishness of this market is concerned. Of course, whether it can breach this level remains to be seen. If it can't, then the market may actually pull back a little bit deeper than the other two equity index, because it has gone up by far the most this year. And if we do see a pullback, the market could possibly see a decline towards the 13,500 to 13,800 levels. So do watch out for that development as well. Over in Asia, we have not really seen the reaction on the Nikkei itself, and yesterday high was 33,665.5, and depending on how it feels, because tomorrow we're going to have the Bank of Japan deciding on its own interest rate decision, most likely to maintain unchanged at negative 0.1%, which they have done since 2016. And of course, today, this afternoon, we are also expecting the European Central Bank to decide on interest rate hikes, and market has already priced in the 0.25% increase by the ECB. So whether the market will be knocked down a little bit remains to be seen, but the market has already taken up the June 1990 high, which put it at a new 33 years high. So watch out for this market to at least pull back in a technical decline towards perhaps 31,000 to 32,000 levels. Over in the Hang Seng, we can see the Hang Seng managed to breach the 19,521 pivot line, but did not quite manage to hang on to its gain, and that could see prices unraveling today onwards and towards ideally the 16,000 to perhaps even 17,000 levels going forward. And in the mainland Chinese equity index, we can see that the recent breach of the 3,800 levels did not see a continued rally, but I think going forward, we should be able to see buying interest returning, taking this market to test the 4,000 levels in the CSI 300 equity index before the market actually go down to a new low for the year, perhaps challenging the last November low at the 3,665. Over in energy markets, we can see the energy did not really rally. The market actually pulled back from a high of $70.44 overnight to test to a low of $68. So the low traded so far last night was $38.04. And if we do see continued weakness, the bracket of prices that previously held the market at $66 to $67.85 could play another role to hold the whole prices before the market build a base to rally. And if we do see a rally, I do believe this market may do a 3-wave corrective rally towards the $80 price range. Okay. Over in precious metal market, we can see that the gold market is still in the doldrum. It did not really react very much to the interest rate hikes, or rather interest rate decision by the Fed. And near term, there is a risk that the market may actually continue to weaken. And if it does weaken, I think the market once breaks the 1,932 levels, may actually go down to challenge as low as the 1,865 to perhaps $1,864 per ounce range. Okay, this is a near-term weakness. I'm still very, very bullish on precious metal, especially going into July. So for the rest of this month, we could possibly see some kind of weakness in gold market, but I do expect a bottom to be formed in this month before the market reverse direction going into July. Over in silver, we can see silver prices is a lot more constructive. However, if the market do break the near-term support line, it may actually see price go back to revisit the most recent low here at $22 thereabout. So if this is the case, the likelihood of market revisiting these levels of $22.30 to $23 remains in focus. Over in currency market, we can see that the dollar actually went down instead of up. A pause in interest rates definitely is not going to cause buyers to buy dollar. But however, the fact that the Federal Reserve said there will be 2 more rate hikes before the year end is out, caused market to actually stabilize. The dollar index actually went up to 102.23 or 24 levels before it stabilized. From here onwards, I do believe there is a chance that the market may actually rally going higher to test the much high of 105.87. And over in the currency market, we have a bit of a mumbo jumbo here. We have a little bit of mixed reaction because the dollar actually fell to 102.20 levels. We saw that the major currencies all has rebounded, extended its most recent corrective rebound. And for euro dollar, it actually went into this bracket of prices, which I do believe may actually offer some selling opportunity. Market just brushed the ideal bracket here of 108.65 to 109.20 with a high of 108.64. And from here onwards, I think the market could be getting ready to trade to the downside, perhaps even taking out the 106.35 levels. If this comes to being, I think the market would be challenging the March low at 105.15 levels. Over in the sterling is a little bit of a mixed bag. I have no view for now. The market looks like it's extending higher, and based on its current momentum, there's a good chance it will test the 125 half levels. Yesterday high was 127 thereabout, and maybe the market has a little bit more room to the upside before we see a reaction. Okay, so in the meantime, I have no view for sterling, but let's move on to the Aussie market. Now, Aussie managed to go up to all the way to 0.6835, and from here, I think the market, although it marginally breached the May high at 0.6818, but the fact that it could not hang on to its gain and reverse down does suggest that the market may have already hit this high here and it's getting ready to pivot to the downside. And if that's the case, I think the market may actually fall back to 0.66 to 0.66 half area. Over in dollar Canadian, we see the dollar extended its fall to 132.75 overnight, and this is an area which did not quite breach the important level here at 132.70 73. Okay, so we are very close to breaching that important level, but it managed to hang on, and from here onwards, because of the rebound that we saw, could possibly set the stage for a technical rebound back to 134.70 to 135.10 levels. Okay, so do watch out for the possibility of a rebound in dollar Canadian. Dollar yen is still unfolding in a triangle pattern. There's a very good case that the market may have already bottomed, did not quite hit the 139 levels before the market bottoms out, because the way it pushes up towards the early part of this morning suggests that the market is getting ready to breach this triangle pattern. And if the market do take up 141, it probably will extend higher towards the 141.60 to 142.85 level. So look out for the challenge of the November high. I'm talking about the last November high of 142.25. So this will complete the triangle pattern and see a post-triangle thrust towards at least challenging the 142.25 levels, ideally into the a little bit higher. So we will have to see how the market reacts here. Okay. Over in Bitcoin, the fact that the Federal Reserve actually paused should actually be seen to be a good development. However, the idea that the market, the Federal Reserve is still going to do 2 more rate hikes before the year end cause Bitcoin prices to come back down instead and breach the $25,000 level for the first time, and is traded to a low of 24,820 thereabout before rebounding back above 25,000. So by and large, we do see further weakness in the Bitcoin now. When we refer to the higher time frame, to the daily time frame, we do see that this pullback is actually seen as a technical pullback. Now, the market actually stabilized in mid-November last year at $19,600 thereabout before attempting to trade to a high of 31,000. Then of course we see the market unravel from there. But this decline here is developing into a three-way structure, which suggests that this pullback is corrective in nature. And if we can see further losses towards perhaps the $22,000 to $23,000 level, market could find a bottom here, and from there build up a base before challenging the higher levels. Perhaps this time the next level will take out the 31,000 levels, and we will have to see for that development. In the meantime, do take care, and I'll come back to you with another update tomorrow. Bye-bye. Take care.